We are live from Bloomberg's World Headquarters in New York. I'm Sonali Basak.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And it's a big deal. The Senate is set to vote this afternoon on its landmark stablecoin bill. The legislation marks a long campaign by the crypto industry to get established regulations and take crypto mainstream.
And the world of finance is gearing up for stablecoins. Everyone from banks to securities firms to fintech startups are experimenting with the tokens, including reportedly Walmart and Amazon.
And famed short seller Jim Chanos fires back at Michael Saylor in a dispute that plays out on Bloomberg Television. We'll bring you all you need to know about that.
That's all ahead on Bloomberg Crypto over the next half hour. First, though, a check of just how Bitcoin has moved over this last week as geopolitical risks have mounted. Look at this. Over the last 7 days, Bitcoin down around 5%. You did see Bitcoin hit a low back at the end of the day on the 12th, going into the 13th. That was the first day that Iran and Israel traded missile attacks at the start of this 5-day skirmish that continues right now. We did see some optimism yesterday when there was this idea that potentially Iran could be ready to make a deal. We heard some comments from the president, but then Bitcoin taking a leg lower just in the last 12 to 16 hours after President Trump did return early from the G7 in Canada to reportedly get back to Washington to work on helping to resolve this crisis. Sonali?
Yeah, interesting dynamics going on there in what has been considered more of a risk asset, but maybe less risky stablecoins. And one stock that has continued to soar is Circle. Very warm welcome here to public markets. The stablecoin issuer has steadily climbed despite mounting risks from markets, and it now has a $34 billion market cap as lawmakers work through stablecoin legislation. Banks are considering adoption, and so are retailers, we're told.
Well, Circle CEO Jeremy Allaire told Bloomberg about the opportunity stablecoins bring to a wide variety of industries.
This is the new money layer of the internet, and it provides tremendous technology to innovate beyond what we've been able to innovate with money before. And it offers tremendous benefits ultimately to these firms' bottom lines. And so it's a technology that's ready, and it's a technology with the Genius Act, which you referred to, I think, which gets the legal certainty to really utilize this at scale.
Now, even firms outside of the financial industry are adopting stablecoins, and retailers like Shopify and Walmart are exploring ways to avoid card fees through stablecoins or pay by bank direct deposits. Bloomberg's Emily Mason reported on this. She joins us now. This was a fascinating story to me, Emily. We've been talking about it a lot, the idea of lowering fees. And of course, retailers are chief among the types of companies that complain about exorbitant credit card fees. Why would they now consider stablecoins instead?
Yeah, I mean, first and foremost, they want to be prepared to accept any form of payment that consumers want to use. So that's kind of paramount importance, so they don't lose out on sales. But the second order sort of dream is that if they can incentivize consumers to pay with stablecoin instead of cards, then they don't have to pay the very expensive fees, which they've been complaining about for a really long time. And they've explored a lot of different avenues like pay by bank, but stablecoin is kind of a new potential avenue for them to do that. And they could also even use the threat of stablecoin to potentially negotiate lower fees. Big retailers like Walmart are kind of known for doing that.
It's so easy to take out your phone or your credit card and just tap it to pay for something when you're at a retailer, or easy to enter this information online. That's what Americans are used to. That's what we're used to doing here in the US. Is there any sort of roadmap for this outside of the US? Like, how are the dynamics different outside of the US than they are in the US?
Yeah, in the US, consumers really love cards. Like, they're super convenient. They offer fraud protections. With credit, you can spend money that you don't immediately have available. It's a credit product. Stablecoin, it's going to be really challenging to get people here to adopt it for everyday retail payments. You have to build in some super compelling incentives. That's kind of been the struggle that Pay by Bank has had. But abroad, it makes a little bit more sense for people, because if they don't have access to a stable currency and they want access to dollars, then stablecoins are a really nice way for them to get that.
All right, thanks so much for joining us. That's Bloomberg's Emily Mason joining us here in our studio. Well, one of the companies launching a stablecoin is PayPal. It's going to live on the Stellar blockchain for real-world payments, commerce, and financing. Let's bring in Denelle Dixon, CEO of Stellar Development Foundation. Denelle, always good to chat with you. I want to start with the ease of use question, because I think this is where really the rubber meets the road when it comes to consumer behavior. Consumers want to do what's easy. They want to do what has consumer protections, and that's credit cards. They want to do what they're rewarded for. And they're used to that when it comes to credit cards. Talk to us a little bit about the opportunity, though, that stablecoins present from a consumer perspective.
Well, if you think about now, and thank you for having me, if you think about where we are now in the blockchain crypto space, there's a lot of focus on ease of use for the consumer side. That wasn't the case 4 years ago. It is the case now. The wallets that people have built and businesses have built out there are really simple. So it actually is very easy to be able to leverage a stablecoin, sometimes not even knowing that you're doing that. And importantly, credit card companies are coming in and they're having relationships where you can actually use a credit card and then use your stablecoin through the credit card. So there's no conversion that you have to make. You can just deplete your stablecoin balance using your credit card. So I actually don't agree that there is a challenge with respect to ease of use. There was 3 to 5 years ago. There isn't today.
I just want to jump in. I know Sonali has a bunch of questions, but this sounds more difficult than swiping a card, then paying the bill at the end of the month or paying whatever you can afford to pay. Going and filling up some sort of wallet, then keeping track of how much is in it so it doesn't get depleted too quickly. Like, that sounds more difficult from a consumer perspective. Again, I'm talking consumer behavior. We want to do what's easiest as consumers. Convince me that stablecoins are the right way.
Well, I think a lot of people use their Venmo to do exactly what you just talked about. A lot of people are using PayPal to do exactly what you just talked about. And that ease of use in leveraging stablecoins there is kind of the same. So I think what Emily said before in your last segment is that outside the US, this is actually going to take off pretty quickly. It already is. In the US, it's a little more complicated because our markets, we're just used to what we have to do here because it's very simple. But I don't think the ease of use of it is going to be the challenge and the barrier to entry.
You know, I actually have a question in the exact opposite direction. And it's, you know, you heard us
You're saying it's too easy, Sonali?
Well, it might be easier for big retailers, as we've been talking about, to maybe bypass the traditional financial system in some ways by going directly to stablecoin. How likely is that? Now, it's really interesting to see you work with a more traditional way payments company. PayPal has been thinking about stablecoins for a long time. But if you are Bank of America or Citigroup, how worried do you have to be that, you know, retailers might not want to work as directly with someone like you?
Well, I don't think I think that what we're seeing now is this really nice combination of traditional financial infrastructure and the new technology. Everybody gets very fearful of this, and I think this has been the challenge that we've had for the last 10 years is really getting people to understand it's just a tech stack. And so banks are actually really excited about leveraging this new technology. And I think if you look at PayPal entered the market with a stablecoin during a time when there wasn't the Genius Act and stablecoin legislation on the table. And they did it because it was actually very useful for their consumers, but also from a business standpoint, it makes a lot of sense. So I think you're seeing traditional financial infrastructure really move to the value of what this technology has to offer, which is exactly the move that should be made.
I guess what I don't necessarily agree with is that it's just a tech stack. Because if these are, yes, they're assets backed by dollars, but they're held differently than you would hold assets in a bank account. And that's the difference, isn't it? At the end of the day, these look a little bit more like money market accounts. So isn't that creating a different way for people to use money?
Well, so there's the U.S. Treasuries that are if you think about, like, Franklin Templeton has issued a money market fund on Stellar. They have that, and they have access to that to be able to build your wealth and to get the interest rates that you can get. With respect to stablecoins, it really is just about the velocity of the asset. So I actually think that it is very similar to holding in a bank account outside the U.S. because lots of folks don't have bank accounts that we're used to having. In the U.S., yeah, you're going to want a bank account, but you're also going to leverage stablecoins for ease of use and for the fees to be so much lower. It's super exciting where we are in the market right now, and I just love to see this kind of technology really take off.
Perhaps exciting for somebody like you in this position, maybe not so exciting for an established credit card processing company like we saw on Friday. Shares of Visa and MasterCard did move lower on that Wall Street Journal report that we've been referencing that says that Amazon and Walmart are reportedly looking at their own stable coins. Talk to us about who you see as the, I don't want to say losers, but there's no other better way to put it. Like,
right, who should be aware?
Yeah, who should be concerned with developments in stablecoins such as these?
Here's what I'll say on that. I think that Visa and MasterCard have been actually working with this tech stack for a while now and trying to figure out how they're going to make their move and leverage the tech stack. Visa's done a really nice job with respect to partnering with Bridge and Stripe and to be able to make those credit cards that I was mentioning before. MasterCard is looking at digital identity. They're all trying to figure out how they can use this technology to make it easier for their consumers and for their businesses. I don't think that there's going to be a loser, but there's going to be shakeups. And I think that this is good from the financial industry standpoint, because the consumer ultimately is going to be the winner, and that's what we want to see.
Stellar Development Foundation CEO Denelle Dixon, we thank you so very much. Of course, we're watching that stablecoin bill as it looks to pass through the Senate. Now, in crypto-related news, we do want to mention a post that was sent just really a number of minutes ago by President Trump. He says that as part of his post, quote, "We now have complete and total control over the skies over Iran." Remember that President Trump left the G7 last night and told people in Tehran to leave. We'll be keeping an eye on developments and any market movements as well, because we have seen, Tim, this morning oil take a little bit of a spike. It's still hanging out around $73 after yesterday on the idea of an initial de-escalation, which we have not seen play through. We did see oil below $70 a share, or $70 a barrel for a while.
Yeah, Bitcoin around its lows of the session today, down about 4% just today. Other cryptocurrencies really all in the red. The Ether down 6.5%, XRP down about 6%.
It's a risk-off mood.
It certainly is. Hey, coming up, Congress back in session with that stablecoin legislation vote later today. We're going to discuss with Franklin Templeton's Sandy Kaul. And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Stablecoin legislation backed by U.S. Treasuries, or T-bills, will create a market that will expand U.S. dollar usage via these stablecoins all around the world. And I think that $2 trillion is a very reasonable number, and I could see it greatly exceeding that.
Big projections from Treasury Secretary Scott Bessent just last week. The Senate is set to pass a landmark crypto regulation bill on Tuesday that could catapult digital assets to the forefront of the financial system. We're going to discuss this with Franklin Templeton, Head of Innovation, Sandy Kaul, who says the clear winner of the stablecoin industry has yet to be decided. Tim and I, Sandy, have been talking a lot about the winners and losers here, but maybe first lay out the vision, because to the extent that the traditional way finance can be changed by new stablecoin rules and an uptick in stablecoin usage, what changes?
Yeah, so we're in the midst of a huge transition in the way that the economy works. We have been an account-driven economy pretty much for the past 50 years, where I have a banking account, I have a savings account, I have an investment account, a brokerage account. These are all separate accounts. And we are transitioning that whole system into being a single cryptographically protected wallet-based system. And as we do this, the way that we use money in that cryptographic wallet is shifting. And stablecoins are the epitome of this move in the use cases away from the traditional banking system into this wallet-based system. And this is why this Genius Act that they're set to pass later today is just so critical to setting the legal foundation and regulatory foundation for us to really embrace this transition that's occurring with these new technologies.
Sandy, I want to talk about the regulatory framework here. I'm going to read from the Associated Press article that was published earlier today about this. There's a provision in the bill that bans members of Congress and their families from profiting off stablecoins. Okay, that kind of makes sense. But that prohibition does not extend to the president and his family, even as Trump builds a crypto empire from the White House. Is that at all alarming to you?
Look, I think that these are all very fluid situations, and sentiment moves back and forth. But I think the more important thing to focus on is some of the rulemaking that is part of this act, and that really gets down to being able to have legal certainty around how these reserve pools are managed, being able to have limitations on what kinds of assets can go into these pools, really understanding the compliance and regulatory requirements for issuing and managing a stablecoin, and this very important point that stablecoins cannot pay out yield, right? That this has been something that some of the stablecoin providers have been kind of getting away with through offering rewards. But the point is that if you are paying out yield on a stablecoin, you are in essence offering an investment contract. And this is why we at Franklin Templeton have our tokenized money market fund, the Benji product suite, because that is a security, right? So you can kind of think of a stablecoin as the cash account in a wallet-based system, and you can think of a tokenized money market fund as the savings account within a token and wallet-based system.
Sandy, there's obviously a lot of excitement around stablecoins. Look no further than Circle since the IPO, up more than a cool 380% in terms of that equity and the performance just in the last few days. But if this is indeed going to disrupt traditional financial players such as Visa and MasterCard, then where do the stablecoin companies make their money? Where's their opportunity to get that part of the transaction?
Yeah, the stablecoin companies are making their money off of the yield that they're generating off of their reserve pool, right? This is how they're able to compete without charging the fees. Now, what we are likely to see is the real constituent that's going to be challenged by these stablecoin dominance is the traditional banks, because the money that goes into the stablecoins is being moved out of the account-based system into the wallet-based system, and it tends to stay there. Very few people cash their stablecoins out back to fiat currency cash or US dollars. Originally it was expected that a stablecoin would be the temporary vehicle and that money would stay in the cash accounts. But what we're seeing is the opposite. We're seeing people hold their stablecoin balances in their wallet, and that cash is being removed from the banking system into the wallet-based system. And that's why banks are now starting to seriously look at issuing their own stablecoins to be able to compete in this space.
I guess I have some skepticisms there, because the way the banks are handling their push into stablecoins is defensive. When I talk to banking executives, they're like, well, we're doing it because we don't really know what it could become, and we want to get ahead of it in case it becomes really large. But that is, entering a game without knowing the rules, isn't it? I mean, how do you know that the stablecoin industry will or won't be something that is significantly competitive to the banking system as we know it today?
Yeah, I think that the banks aren't sure. And I think you're exactly right. It is being looked at as a defensive play. But I think that they have to take this threat seriously, because if money comes out of a checking account or out of a savings account and it doesn't come back in, that affects the bank's balances and the way that the banks earn their money on the interest on those balances. So they have to be both thinking defensively and thinking offensively about how they might be able to use their payment networks in a wallet-based system. So I think that, banks evolve and change, and they will evolve and change and embrace these new opportunities, but it is being driven by outside pressures, not by the bank's own internal desire to kind of rethink the system.
Sandy Kaul, Head of Innovation over at Franklin Templeton. Sandy, always good to see you. Thanks for joining us. Do appreciate it. Well, coming up, a dramatic turn of events as Tron reportedly plans to go public. This comes just a few months after regulators agreed to pause a fraud investigation into several of his companies. And last week on Bloomberg Crypto, Michael Saylor defended Strategy's position after Jim Chanos says he is shorting the firm. Saylor said that Chanos doesn't understand Strategy's business model. Bloomberg caught up with Chanos and gave him a chance to respond.
I always love it when management say, well, he just doesn't understand our business. Michael Saylor is a wonderful salesman, but that's what he is. He's a salesman. And what he's selling investors is the concept that you give me your money and I'm just going to go buy Bitcoin. And hopefully the value of my stock trades at a premium to the value of that Bitcoin. And so as long as I can keep doing that, I generate value. And this is, of course, I called it financial gibberish.
Now, for the first time in 100 years, large public companies have a capital asset that they can consider in lieu of Treasury bills, and that's Bitcoin. It doesn't make sense to consider real estate or gold or paintings or barrels of oil as a Treasury asset. It does make sense to consider Bitcoin. So really, we're year one of a new era.
Strategy's Michael Saylor on the show last week talking about the growing adoption of crypto treasuries. And that leads us to the next story, Justin Sun's Tron. It's a firm that plans to go public after the U.S. paused several fraud investigations into Justin Sun, this according to the Financial Times. And reportedly, the new venue will be buying and holding the Tron token. Let's get the latest from Bloomberg Crypto editor Mike Regan. You know, Justin Sun, big story. We've heard about his closeness to the president before throughout the course of this year as well.
I thought you were going to say we heard about the purchase of the banana. Yeah. That's what I thought. That's what he's known for. He bought his banana.
That's his biggest claim to fame. Yeah.
Fair enough. Fair enough.
It's
right.
art. It's art.
$6 million banana.
Yeah. Okay.
So
I apologize.
What do you make?
But he's the banana guy.
Well, now he's the going public guy.
Yeah. Also bought that lunch with Warren Buffett too. I don't think they ate the banana at that lunch, but that was his first sort of big splash in the news. So yeah, so basically, it kind of taken a page from the Michael Saylor playbook, except this time applying it to the cryptocurrency that he's most associated with, which is Tron. It's a pretty big token, about 26 billion market value for Tron. It is a top 10 cryptocurrency, but one we haven't really heard or talked a lot much in recent years. But you know, basically what they're going to do is entities associated with Justin Sun bought about 100 million worth of equity in this tiny penny stock called SRM Entertainment. Very small company, about 4 million in revenue, loss making in the last several years that we have data on them. And you know, so basically a reverse merger. That's enough equity to control this company now and turn it into a Tron Treasury company. So with that equity investment, they will turn around and buy the Tron token and hold it in their treasury. No word if they'll still sort of keep selling toys. They were, you know, their business was selling stuffed animals and other toys, but clearly another company pivoting to just being a crypto holding company.
So 30 seconds left, perhaps not enough time to explain the utility of the Tron token versus something that consumers, I think, are more familiar with versus Bitcoin, which of course is what Michael Saylor's going for. What's the utility of Tron, just in 30 seconds?
You know, I think, you know, Justin Sun would probably put it in the same camp as Bitcoin as far as, you know, a major token that's a store of value. You know, it hasn't quite performed online with Bitcoin. It's got a huge number of tokens outstanding, so it only trades for about 27 cents. So call it a value crypto, I guess, or a penny stock crypto, if you will.
All right, and it doesn't spoil like a banana does, I guess we could say. Bloomberg's Mike Regan of the crypto team here at Bloomberg. That is going to do it for Bloomberg Crypto. Join us again today, well, actually next week on Thursday, same time, noon Eastern. This is Bloomberg.